Thank you, everybody. My name is Sadeq Safarini, CEO of Vector ML Analytics. And today we will be interviewing Frank Tian, the author of the book Unsecured Lending Risk Management. Frank Tian is a seasoned risk management professional in the unsecured lending industry. His work over the past 2 decades has spanned the full spectrum of retail risk management, from all the way from credit risk strategy and risk modeling to credit systems and fraud management. Frank has led various risk positions at multiple financial institutions in the US and Canada, including Wells Fargo, MUFG, Union Bank, GE Money, BMO, and CIBC. How are you doing, Frank?
Hey, good. How are you, Stack?
Now, it's really quite a pleasure and honor to have you on board.
Thank you. My pleasure as well.
All right. So I got a couple of questions for you, Frank. And the first one is, would you be kindly enough to give us a quick update on the current state of consumer credit in US and Canada?
Sure. We have 18 months into the pandemic. There have been some changes in consumer credit space. In both countries, what we have seen is for mortgage, the activity really goes up a lot, right? People, they crave for more space. They needed the home, right, for shelter, at the same time for office and for school. So in the meanwhile, for revolving credit, as an example, the credit card, their outstanding balance has experienced a big decrease because people do not have many places to shop, right? They cannot travel. So, and also what we have seen this year is that as the economy reopens, the purchase activity comes back. However, people have more savings, so they can really pay off that revolving debt. So it's not a great news for lenders because there's the top line revenue pressure, but I think it's good for consumer credit overall, right? So consumers, they need to take a break from the debt building process and reset. I think it's good for the economy in the long run. And very quickly on the risk side, the good news is that all the fears people had last year regarding the skyrocketing loss, that did not materialize. So for a couple of reasons. One is that the governments, they roll out various fiscal support programs, right, including stimulus checks, directly send money to consumers' pockets. After all, so the consumers are not at fault at all, right? So it's a pandemic, natural disaster. So we need to help them out. Also, the lenders, they roll out various payment forbearance program. You can skip payments, reduce interest. So that also helps consumers during the tough time. So overall, what we have seen is the public sector, private sector, they work together. Essentially, this is a buy more time tactic, right? So give more time for consumers to come back into workplace, wait until the vaccine is available. So it works. So the good news is that it works. You know, after 18 months, we have seen the vaccination effort goes up and the economy goes back, not fully, but close to the pre-pandemic levels in certain sectors. If you look at the Q2, the US banks, the top 4 banks, their allowance release, they have released almost 2/3 of all the allowance built up from last year. So I think that's good news. At the same time, we're not out of woods yet, right? There's still the Delta variant. So I said to my friends, this is not the best way to learn the Greek letters these days, but the variant concern is definitely there. And we just need to be very cautious, continue to monitor the situation and manage accordingly.
Perfect, perfect. Thank you so much. So the second question is, looking beyond consumer credit, any other implication does COVID bring to the banking industry?
Yes, I think there are a few I can think of. The first one is that why the industry is fighting with the pandemic. There's another pandemic of fraud activities going on, right? You have the cyber, you have a cyber threat, so attacking the business directly. Actually, it's even beyond the banking industry, right? So you see the pipeline company, so healthcare everywhere. So also there are different fraud schemes targeting the consumers directly, right? So people are more isolated, so they look for more information. So some fraudster they play into that situation. So I think that gave the industry and also the consumers a lot of headaches. So we have a lot of work to do there. Another impact is that in terms of the business intelligence, whether it's in risk management, marketing, product management, the need to get more in-time analysis, right? So even real-time intelligence is even more important. So before we have maybe quarterly report, monthly report, but when you are in the quickly evolving situation like the pandemic, especially the first few months, all those backward-looking information are not useful at all, right? So the need is very clear that the industry needs to embrace the more real-time analysis, which is driven by automation technology, right? Driven by artificial intelligence. I know Vector is doing some good work here. This is definitely a trend that the industry needs to embrace, because the faster you take in the intelligence, you can make better informed decisions, right? So the lastly, I think the lenders, so whether they are fintechs or traditional FIs, they realize that they have to invest in technology first, right? So that investment is not a choice anymore. So during the pandemic, you need the technology to connect you with your customers, right? You serve them so in a digital fashion. You need to mobilize your workforce. So they are all over the countries. So how do you connect them together to work efficiently? So that's driven by technology, right? So and also there's also investment for your employees. So businesses are performed by employees, right? So besides the pandemics, you have seen natural disasters, right? You have seen the social unrest. So all of this can easily interrupt your day-to-day work process. So then, how do you train your employees to best utilize technologies to adapt to the situation, right? You reskill them, also take care of their mental health, right? There's a lot of burnouts right now after people working so long. There's less boundaries between work and family life. So we need to really invest in the employees' well-being. So yeah, along with the technology. So these are the two key drivers of especially the banking industries, right? So yeah, I think you will see more strategic investments from different banks. So the large banks, they have resources, they can build things. So the smaller institutions, maybe they can look into whether there are some solutions out there, right? So they can take advantage. Yeah.
Perfect, perfect. So the question after that is, what is the view of the fintech versus traditional financial institution? What's your view on that? Is there any quite difference between how the way fintechs operate, relative to other traditional financial institutions?
Yeah, fintechs are popping up quite a bit in the headline news, right? In the most recent years, even hard to track, who is who these days. But fintechs overall, they have gained quite some businesses in the industry, right? So financial service industries is huge, right? You have banking, you have insurance, yeah. So there are just so much opportunities for new entrants. So I think new entrants are always welcome. So especially you have seen some fintechs, they use technology. Really, they're riding the wave of digitalization, smartphone technologies. They bring efficiencies in a lot of processes, right? They actually also bring down the financial cost for the end consumers. Good example will be the overdraft fee. So in the US markets. So as long as you can bring these benefits to the society, so you ought to have your own places here. So I think that's the positive changes that fintechs have brought to the industry. However, there are also some things they still need to solve because many of the fintech companies, they are not profitable yet, right? They have to demonstrate that their business model is sustainable, right? So can deliver the return consistently. And also in some areas that the regulation so is not clear yet, right? So maybe they are playing a regulation arbitrage game. So we have to see this how it plays out in the long run. But in the meantime, for traditional FIs, let's not forget that they are not running everything manually, right? They rely on technologies a lot in the past, 40, 60 years. So they definitely have the capabilities to utilize the latest technologies, even though maybe they are a little bit slow, right? So compared with the fintechs, what we have seen is that some traditional FIs, they roll out their own digital brands, right? So, or they directly invest in some of the fintechs. So they can benefit from the technology, also the growth. Or you have seen the traditional FIs, they form partnership, right? So with the fintech companies, so they can provide the balance sheet, so the funding, right? So this really utilize the strengths of both parties. So all of this, so what does this mean? I think it means that fintechs, I think they are here to stay, right? Because the benefit they are bringing to the industry. But however, so what we began to see is that the industry is evolving into, there's a good mixture of fintechs, traditional FIs, even the big techs, right? So I think it will be a very diverse ecosystem. So from now on.
Perfect, perfect. And then lastly, I got one more question for you. You recently published a book. It's called Unsecured Lending Risk Management. I was fortunate to kind of read the book, and it's very insightful. So would you love to tell our audience and followers a little bit more about the book?
Oh, sure. Yeah, thanks for being a reader of my book. So yeah, I have worked in the industry for 20 years, right? Specializing in the unsecured lending, risk management. So this thought has been with me for a few years because one is that there are always people approaching me asking me about what's the daily life, as a risk professional in this unsecured lending space. So I think there's a need to get the message out, right, to those people. The second thing is that, as we just mentioned, there are new companies coming up, right? So new business models, the way they deliver the products. So that naturally brings in new generations of talents, right? So not only in risk management, but also whether it's product, marketing, so audit, finance. So I think the bottom line is that even with all the new companies, there are some principles of the unsecured lending business. So they do not change, right? So the way we manage the risk management, there are certain philosophies. So they're still relevant. So that's the reason I'm taking this opportunity, in last year during pandemic. So I'm working out of my home. I got to save a lot of time from the commute, right? So
We can work
a lot
too
of
well.
times, yeah,
That's
yeah,
one of the advantages. I mean, it's good. It's not all negative. So
right. So why don't I put the time, into a good use? That's the reason I spent a good probably 7-8 months to really organize my thoughts, the experience I learned over the years from different institutions, also from different colleagues. So into this introductory book. I hope this book will come handy for people who have just started in the industry, or who have an interest in the industry, try to learn some basic things. Yeah, I hope the readers will find the book helpful.
perfect. Well, it's been quite an honor. Thank you so much for joining our channel. I mean, best of luck, and we keep us posted with all the good news. And thank you again.
Great.
You,
Thanks, Sadeq. Always a great pleasure.
you too. Thanks.